What if I told you that the wealthy have a secret, a strategy that keeps their wealth not just intact, but growing over time? Intriguing, isn't it? This isn't about making quick cash or riding the waves of volatile markets. No, it's about something much more profound. It's about understanding the true nature of value and how it evolves over time. You see, the wealthy don't just accumulate, they invest in assets that grow more precious with each passing year. These are things that don't lose their charm or worth the moment they leave the store. Rather, they become more desirable, more valuable, and ultimately more powerful. This isn't about materialistic indulgence, but rather smart, strategic, and often unexpected choices. So, are you ready to uncover what these choices are? In the next few minutes, we will unveil 7 assets the wealthy never sell. Prepare to rethink your idea of value. The first asset we're delving into is fine art. Yes, those beautiful canvases aren't just for show. They represent a world of creativity, emotion, and history. But more than that, they are a tangible asset that can appreciate in value over time. Just imagine, a painting hanging on your wall could be worth more than a house in a few decades. That's the power of art as an investment. It's not about buying a piece and selling it the next day. It's about holding on to it, letting it age like a fine wine, and watching its value soar. The wealthy have known this secret for centuries. They've collected art pieces, not just for their aesthetic appeal, but as a smart financial move. They've understood that art, especially works from renowned artists, can offer returns that sometimes outperform traditional investments like stocks or bonds. Investing in art requires a discerning eye, a deep understanding of the art market, and the patience to wait for the right moment. But the rewards can be substantial. There is something magical about owning a piece of art that is not only a feast for the eyes, but also a financial powerhouse. So the next time you see a piece of art, think beyond its beauty. Think of it as a potential investment. In the world of the wealthy, art isn't just about culture and sophistication, but also about smart, long-term financial strategy. Moving on to the second asset, rare watches. Time is money, they say, and in this case, it's quite literal. Not every watch that ticks is a worthy investment, but there are a select few timepieces that truly hold their weight in gold. These are the watches that are meticulously crafted by globally renowned brands, such as Rolex and Patek Philippe. Their value doesn't simply lie in the brand name, but in the scarcity of their limited editions and the heritage they carry. Each watch is a masterpiece, a testament to the skill and precision of the watchmaker. The craftsmanship that goes into each piece is a story in itself, a story that adds to the watch's intrinsic value. And with time, as these watches become rarer, their value only increases. It's not simply about owning a device that tells time, it's about owning a piece of history, a piece of art, a piece of craftsmanship that stands the test of time. A watch isn't just a timepiece, it's a timeless piece of investment. Next up is classic cars. More than just a mode of transportation, they're rolling investments. The allure of classic cars transcends the thrill of the open road. It's a journey into the past, a connection to the history of auto engineering and design. But beyond their aesthetic and nostalgic appeal, classic cars can be an incredibly smart investment. As with any investment, not all classic cars are created equal. The value is often found in rarity, condition, and historical significance. Cars that are limited in production or associated with a significant event or person are particularly valuable. Over time, these cars can appreciate significantly, sometimes even outpacing traditional investments. Moreover, classic cars are a tangible asset. They're something you can enjoy while they appreciate in value. They're not just sitting in a vault or on a spreadsheet. They're in your garage, ready for a Sunday drive. You can touch them, drive them, admire them. They're an investment you can truly enjoy. Remember, not all cars depreciate, some appreciate, especially if they have a classic charm. Let's talk about land, the fourth asset. As Mark Twain said, buy land, they're not making it anymore. Land is a fascinating asset. It's finite, it's tangible, and it's been a cornerstone of wealth for centuries. Unlike other assets, land doesn't wear out, it doesn't depreciate, and it's immune to the whims of the market. Land is also incredibly versatile. It can be used for farming, for housing, for commerce, or simply held as an investment. It's this versatility that makes land so attractive to the wealthy. They understand that the value of land isn't necessarily in what's on it today, but in its potential for tomorrow. But land isn't just about potential, it's about scarcity. And as our world continues to grow and urbanize, land in key locations is becoming increasingly scarce. This scarcity drives up value, making land a powerful asset for those with the foresight to invest. Land isn't just square footage, it's a strategic asset that can yield returns in the long run. Fifth on the list is intellectual property silent moneymakers that bring in royalties with minimal effort. Intellectual property, or IP, is a realm often misunderstood. It's not just about owning ideas, but about owning something far more tangible, a continuous stream of income. IP comes in various forms: copyrights, trademarks, patents. Each one represents a piece of work, an invention, or a unique symbol that carries value. Authors earn from their books long after they've written them. Inventors reap rewards from their innovations, and companies profit from their unique logos and brand names. The beauty of IP is that it doesn't require constant attention or maintenance. Once established, it can generate income passively. This is why it's so attractive to the wealthy. They see the value in these intangible assets and the steady income they provide. The wealthy don't just hold on to their IP. They often pass it down through generations, ensuring their legacy continues to generate wealth. Intellectual property isn't just about owning ideas, it's about owning a continuous stream of income. Moving on to the sixth asset, private businesses. More than just a source of income, they're legacy builders. Many a wealthy individual has a private company in their portfolio, a company they never intend to sell. Why, you may ask? Well, there's a multitude of reasons. Firstly, these businesses often generate a consistent cash flow. If run well, they can provide a steady and reliable income stream, independent of the ebbs and flows of the stock market or other investments. This level of financial stability is a cornerstone of sustained wealth. Secondly, owning a private business can offer significant tax benefits, cleverly reducing financial liabilities and maximizing wealth preservation. This is an often overlooked yet vital aspect of wealth management. But it's not all about the money. Owning a private business offers something that no stock or bond ever could: the ability to create and shape a legacy. These businesses can be passed down through generations, becoming a family symbol of success, hard work, and perseverance. And let's not forget the sense of achievement and purpose that comes with running a successful business. It's not just about financial gain, but the satisfaction of creating jobs, contributing to the economy, and making a tangible difference in people's lives. Private businesses aren't just about profits. They're about building a sustainable wealth generation machine. Last but not least, precious metals, the seventh asset, a symbol of stability that shines the brightest in uncertain times. Gold and silver, the stars of this category, have held their allure since ancient times, serving as a universally accepted form of wealth. But what makes them so attractive to the affluent investor? Firstly, these metals are more than just shiny trinkets. They're tangible assets, real physical entities that you can hold in your hand. They don't rely on someone else's promise to pay, unlike stocks or bonds. That's a comfort that's hard to overstate. Secondly, precious metals serve as a hedge against inflation. When the value of paper currency falls, the value of gold and silver tends to rise. This makes them a safe harbor during economic storms, a financial lifeboat that can keep your wealth afloat when other assets are sinking. Finally, gold and silver are finite resources. There's only so much of them in the ground, and once they're gone, they're gone. This scarcity, combined with their enduring appeal, helps to underpin their value over the long term. So, the next time you gaze at a gold necklace or a silver coin, remember, you're not just looking at a pretty piece of metal. You're looking at a piece of history, a store of value, a hedge against uncertainty. Gold and silver aren't just shiny objects, they're solid investments that have stood the test of time. Now that we've unveiled these 7 assets, it's time to rethink your idea of value. These assets aren't just about the material wealth they represent, they're a reflection of a mindset, a philosophy, if you will. The wealthy don't just chase trends, they invest in value that stands the test of time. So which of these assets appeals to you? What kind of value do you want to create and preserve? It's time to look beyond the immediate and envision the legacy you want to build. Please like and subscribe for more content like this. I will see you in the next video.